Imagine holding a token that powers the indexing of the entire Web3 world. Yet its price is currently fighting for its life at levels not seen since its launch in late 2020. Right now, the graph is trading between 3 and 4 cents, a zone that has historically been the absolute floor for this project. We are looking at a scenario where the Heikinashi RSI is in extreme oversold territory, levels of exhaustion we have literally never seen in the history of GRT. The stakes couldn't be higher, because if this launch price support fails to hold on a weekly closing basis, we enter price discovery to the downside. However, if the data-driven fundamentals and the technical wedge I'm seeing play out, this could be the ultimate blood-in-the-streets opportunity for those with a high timeframe perspective. If you have been following the channel throughout 2025, you know I've been transparent about my journey with GRT. I've accumulated since 2022, took significant profits during the run to 49 cents in early 2024, but the recent price action has been, frankly, confusing for many. Despite a flurry of technical developments and ecosystem growth, the token has been bleeding out against Bitcoin. We have to address the elephant in the room. Bitcoin dominance has been the absolute king of this cycle. Most altcoins, even those with solid utility like the graph, are being drained of liquidity. This is not just a GRT problem. It's a macro altcoin environment problem. But as the token sits at this critical 3 to 4 cent range, we need to decide if the underlying network value still justifies the position. Looking at the fundamental side, the news flow is actually surprisingly bullish, which creates a massive divergence from the price. If you look at the recent news from SmartCon 2025, the founding team at Edge and Node just unveiled AMP. This is being marketed as the world's first blockchain-native database designed for enterprise-scale data. What's even more impressive is the recognition from the DTCC, the entity that processes trillions in securities transactions. They are looking to the graph for verifiable, production-grade blockchain data. Furthermore, the integration with Chainlink's CCIP means GRT is now bridging across Arbitrum, Base, Avalanche, and Solana. We also saw that the network processed over 1 trillion queries in history. So, why isn't the price moving? If we look at the token terminal data, the reality is that expenses are currently outpacing revenue. The protocol is still in a heavy growth and subsidization phase. While usage is at an all-time high, the market is currently punishing infrastructure plays that aren't showing immediate net profitability. My take? The market is currently valuing GRT as a struggling tech startup rather than the indispensable utility it actually is. Now, let's dive into the weekly chart because the technicals are pointing for a relief rally. As you can see, GRT has been trapped inside a massive falling wedge, indicated by that 2 white lines, since early 2024. We are currently on our way to potentially touch the bottom support of this wedge for the 6th major retest. The price is currently suppressed below every major exponential moving average. The 10 and 21 EMAs, the 55 EMA in purple, the 100 yellow, and the 200 green SMA. This is a purely bearish trend on the high timeframes. However, the volume profile on the left shows our point of control up at 9 cents. This acts like a magnet. If we get a reversal, that is the natural first major target where liquidity is concentrated. Looking at the Fibonacci levels anchored from the high of 49 cents in December 2024, down to the recent October liquidation wick at 3 cents, our key recovery levels are the 236 at 14 cents and the 382 at 20 cents. But before we even think about 20 cents, we have to clear 2 descending trend lines, those orange lines, that are currently acting as a ceiling. So, my strategy and load zone. I'm personally using this 3 to 4 cent green box as my primary accumulation zone. For my short-term trade, I have a stop loss set a bit below 3 cents, 10% below to be exact. This is specifically to protect against a weekly candle close below the 2020 launch price. If we lose this level on a weekly candle close, the setup is invalidated for the short term. However, I'll keep my long-term bag, which is based on past profits. I see no reason to sell at this level. For my take-profit targets, I'm looking at 5 cents for a quick scalp, followed by 10 cents, 18 cents, and 30 cents. My moonbag target is the previous local high of 49 cents and potentially 77 cents if the cycle finally rotates. I'm trailing my stops aggressively. Once we hit target 1, the stop moves to entry. If target 2 is hit, the stop moves to target 1, and so on. This ensures that even in this volatile environment, I'm locking in gains. The risk-to-reward ratio for the graph at these levels is pretty good, as long as you're disciplined and stick to your stop loss. We are currently navigating a market where Bitcoin dominance is hovering near 60%, and the altcoin season index has plummeted to a reading of 19. This tells us that liquidity is being sucked out of the broader market and concentrated into the majors, pushing GRT toward that critical 3-cent launch price. The worst-case scenario is a continuation of this trend, where Bitcoin dominance climbs towards 65%, effectively starving mid-cap infrastructure tokens and potentially driving GRT into the 2-cent range. On the flip side, the best-case scenario is a classic mean reversion. The extreme oversold reading on the Heikin-Ashi RSI suggests a massive relief rally is overdue. If we see a short squeeze, the first logical target is the 9-cent point of control, which represents nearly a 3x move from current prices. My thesis is strictly built on high timeframe probability. If you look back at December 2022, the investors who ignored the crypto is dead narrative and bought the blood at 5 cents were rewarded with an 800% return in just over a year when the token hit 49 cents. While history doesn't always repeat exactly, it often rhymes for those who accumulate during periods of maximum pain. I'm personally adding a tactical swing position here, completely separate from my long-term core holdings. I'm using a trailing stop-loss strategy. Once we hit our first target at 5 cents, my stop moves to my entry price, ensuring this becomes a risk-free trade as we aim for the higher levels of 77 cents. The graph remains one of the most fundamentally robust protocols in the entire industry, yet it is currently facing its ultimate trial by fire. The disconnect we are seeing between the network's actual utility, processing over 1.2 trillion queries, and its current price action is nothing short of staggering. For me, this is a definitive line-in-the-sand moment. If a project that has secured partnerships with the DTCC and launched enterprise-grade tech like AMP cannot hold its 2020 launch price, then the entire altcoin market structure is in for a much deeper correction. However, as a position trader, I find that these moments of extreme confusion and boring price action often precede the biggest trend shifts. I'm choosing to trust the data and the chart patterns over the prevailing social media sentiment. If you found this data-heavy breakdown valuable and want to see more content that prioritizes technical rigor over hype, make sure to hit that like button and subscribe to the channel. I'm providing real-time updates and chart alerts on this GRT setup inside my free Telegram community, so click the link in the pinned comment to join us. If you want to see how this analysis has evolved over the last week, I covered the graph's initial setup on December 20th. You can check that video out on the screen right now to see the full macro story. Remember to stay disciplined, keep your emotions in check, and let the data guide your trades. Thanks for watching. Never financial advice, and I'll see you tomorrow in the next one.